Let me ask you something. Have you noticed how everyone is acting normal, but behind the scenes, people are stressed? Not a little stressed, I mean real stress. The kind where you check your bank account before you go inside the store. The kind where your paycheck hits and it's already gone. The kind where you're not even buying luxury. You're buying groceries, gas, bills, and somehow you're still behind. And if you've been feeling that, I need you to hear this. It's not just you. Because credit card debt is exploding right now. And it's not exploding because people are buying designer clothes. It's exploding because people are using credit cards to survive. And that is the scariest kind of debt. Because when credit cards become your emergency fund, you're living on a financial cliff. And today, we're breaking down what's really happening. Why credit card debt is rising so fast. Why the economy is pushing people into it. Why interest rates make it worse than ever. What happens when this snaps, and the exact plan to escape it, even if you feel trapped. This is MacroEcho. Let's talk about the credit card debt explosion and what comes next. Credit cards are dangerous because they don't feel like debt at first. They feel like relief. They feel like release. You swipe and you can breathe again. You swipe and your lights stay on. You swipe and you get groceries. You swipe and your car keeps running. So your brain doesn't label it as debt. Your brain labels it as survival. And that's why credit card debt is exploding. Because when life gets expensive, people don't just stop living, they adapt. And one of the fastest adaptations is debt. It's not because people are stupid, it's because the system got tighter. Rent went up, groceries went up, car insurance went up, everything went up. But wages didn't rise enough to cover it. So people used the only tool they had, credit. And credit cards are the first trap people fall into. And the worst part, the trap looks like a solution at first. Here's what most people don't understand. Credit card debt doesn't start with spending. It starts with margin disappearing. Margin is the money left after bills. If you make $3,500 a month and your bills are $3,300, you have $200 margin. That $200 is your safety. That $200 is your breathing room. That $200 is your ability to handle life. But now, imagine your rent jumps $250. Now you don't have margin. Now you have a deficit. Now every month you're short. And what happens when you're short? You don't stop eating. You don't stop driving. You don't stop paying bills. You swipe. That's how debt begins. Not from bad choices, from math. And once you understand that, you stop blaming yourself. Because if the system removes margin from millions of people, debt will rise. It's automatic, it's predictable, it's the natural result of the squeeze. And that's what we're living through right now. Now, some people might say, credit card debt has always existed. True, but this time is different because interest rates are higher. And when interest rates are high, credit card debt becomes brutal. It becomes a punishment. Because credit cards don't charge you 5% or 8%, they can charge you 20, 25, even 30% APR. That means if you're carrying debt, your balance grows fast, even if you stop spending. And that's the scary part. In the past, people could carry debt and slowly pay it off. But in a high-rate world, credit card debt becomes sticky. It becomes harder to escape. It becomes like quicksand. The harder you fight, the more you sink.
So if you're feeling like, I'm paying every month, but the balance isn't moving, that's not you failing. That's the math of high interest, and it's designed that way. Let me explain the trap cycle. Step 1, you fall behind. Bills rise, income stays the same. Step 2, you swipe to survive. Groceries, gas, emergencies. Step 3, you carry a balance. You can't pay it off in full. Step 4, interest grows. Now you owe more than you spent. Step 5, minimum payments trap you. You pay, but barely make progress. Step 6, you swipe again because now your paycheck is even weaker. And the cycle repeats. This is the credit card treadmill, and it's one of the hardest traps to escape because it's silent. Nobody sees it. You still show up to work, you still live your life, but financially, you're bleeding. And here's the part that makes it worse. When people feel trapped, they stop planning long term. They stop investing. They stop thinking about the future. They think, let me survive this month. And that survival mindset keeps you trapped longer. Now, let's talk about what SNAP means. When credit card debt explodes, something eventually breaks. Not in one dramatic movie scene, but in real-life ways. People stop paying, defaults rise, banks tighten lending, people lose access to credit, spending slows down, businesses lose sales, layoffs increase, the economy weakens. Because credit cards don't just affect individuals, they affect the entire economy. The economy runs on spending, and credit cards have been supporting spending. They've been acting like a fake cushion. But if that cushion collapses, the economy feels it. Because when people can't swipe anymore, they stop buying. And when people stop buying, businesses suffer. And when businesses suffer, jobs get cut. So credit card debt isn't just a personal problem, it's a system problem. And that's why it's dangerous. Now let's go deeper. People aren't using credit because they want to. They're using it because life is expensive. But why is life expensive? Here are the big drivers. 1. Housing. Rent is high, buying is hard. 2. Food. Groceries are up, shrinkflation is everywhere. 3. Transportation. Car prices, repairs, insurance. 4. Healthcare. One sickness can destroy your budget. 5. No margin. Everything is stacked. So credit becomes the bridge between income and survival. And that's why this debt wave is so dangerous, because it's not fun debt, it's survival debt. And survival debt doesn't stop until something changes. Either income rises, or costs fall, or the person breaks. That's the truth. Now let's make this practical. If you're watching this, how do you know if you're in trouble? Here are the warning signs. You can only afford the minimum payment. You use one credit card to pay another bill. Your balance isn't dropping month to month. You feel relief when your paycheck hits, then panic again. You avoid checking your balance. You're using credit for groceries and gas. You don't have an emergency fund. You're scared of one surprise expense. If any of that is you, you're not alone, but you need a plan, because ignoring it doesn't fix it, it compounds. Now we get to the most important part of this entire video. How do you escape credit card debt in 2026? Here's the exact plan. Step 1. Stop the bleeding. You cannot pay off debt while adding new debt. So your first mission is make your spending less than your income, even if it's uncomfortable, even if you have to cut aggressively, because debt payoff starts with stopping the leak. Step 2. List every card. Write down balance, interest rate, minimum payment. Seeing it is power. Step 3. Choose your payoff method. There are 2 methods. Avalanche, pay highest interest first. Snowball, pay smallest balance first.
Both work. The best method is the one you'll actually stick to. Step 4. Lower the interest. This is a cheat code. Try balance transfer, 0% promo. Personal loan, lower APR. Call the card company and ask for a lower rate. Hardship programs. Even a small rate drop saves you months. Step 5. Increase income temporarily. This is the fastest way out. Overtime. Second job. Weekend work. Freelancing. You don't need it forever. You need it until the debt is gone. Step 6. Build a mini emergency fund. Even $500 to $1,000. Because without a buffer, you'll swipe again. Step 7. Replace credit with a system. Once you escape, you need rules. Because if you don't change the system, you'll return to the trap. Now I want to speak directly to the person watching this who feels trapped. If you feel like, I'm never getting out, I need you to understand something. Credit card debt is not a life sentence. It's a math problem. And math problems have solutions. But you need 2 things: a plan, consistency. Even $50 extra a week changes the timeline. Even $100 extra a week changes everything. Because momentum builds. And once the balance starts dropping, you start winning mentally again. That's the real battle, the mental battle. Because debt doesn't just drain your money, it drains your confidence. And you need your confidence back. Now let's zoom out. Credit card debt exploding is a symptom. The real problem is the economy squeezing people. So how do you win in 2026? You do 3 things. 1. Protect margin. Lower fixed costs. 2. Increase income. Job switch, skill upgrade, side income. 3. Build assets, something that grows over time. Because wages alone are fragile. Ownership is protection. That's how you escape the trap long term. So here's the truth. Credit card debt is exploding, not because people are reckless, but because life got expensive and the margin disappeared. But it will snap. And when it does, people who prepared will be okay. People who ignored it will struggle. So if you're in credit card debt, don't panic. But don't delay. Make a plan. Increase income. Lower interest. Destroy the balance. And build your financial breathing room back. This is MacroEcho. If you want more videos that explain the economy in a way that actually helps your money, subscribe. And comment below, are you seeing prices rise faster than your paycheck? I'll see you in the next one.